So we're going to look at some numbers today. This is the effect, how inflation affects your mortgage, right? This is what most people don't see, how inflation is a major, you have to consider it, it's a major consideration in paying down your mortgage, okay? So let's look at this for a second. Let's say your monthly payment is $2,000. And nowadays it's probably $3,000. So let's just go $3,000. Most people are paying between $2,500 to $3,000. So $2,500. I usually use high school, average, right, from this day to this day on inflation. And I think with all the money printing that's going on in the government, it's just gonna get worse, guys. I don't know if you understand how money is created. So that's another topic in itself. But I graduated in 1999, and I like using high school because that's when you go out into the world, and that's when you start working, right, for yourself, or you start to making your own money to today. So what's the average in that result? So 2.6 average. I'll calculate that. So when you're looking at this, as you can tell, that $2,500 in, let's just say 20 years, look at that. This number is going down because every year, let's say in 30 years, that $2,500 is only going to be worth $1,000. Okay, I'm just rounding the numbers here. In 15 years, that $2,500 is only going to be worth $1,700. So your dollars today, that's the best that it's ever going to get, right? Because in the future, it's going to be worth less. Now, knowing that your $2,500 today can purchase $2,500 worth of goods, in 15 years, it's only going to be able to purchase $1,700 worth of goods. In 30 years, it's only going to be able to purchase $1,100 worth of goods. Do you think the bank's going to want that $2,500 now? Is going to want that $2,500 in 30 years? I want you to think about that. So your money today is worth more than that's the best that it's ever going to be. Okay? And let's look at this another way, because inflation usually runs between 2 to 4%. I know in this past couple of years, inflation has been in the 7s and 9%, right? So it's been insane. So over here, let's look at this from an equity perspective. Even if we're just looking at it, I'll do another number, 100,000. Let's say you're putting $100,000 in 4% inflation. Inflation right now, 2023 is around 6%. Okay, so let's look at that 4%. 4%, if you're dumping $100,000 in your house, and as you can see here, it's just eroding that dollar, right? Let's just look at it 15 years. In 15 years, your $100,000 is now worth, how do you stop this thing? There we go. In 15 years, your $100,000 is now worth $55,000. Okay, so when you're trapping equity into your property, you're dumping a lot. What most people don't understand: return on equity is zero. The house is going to appreciate anyways. It's going to go down in value. It could crash. You don't know that. You don't control that piece. So dumping $100,000 in your house and trapping it there, one, it's earning 0%. Inflation is eating it up, and number two, I think, which is more important, you have no control on that money. You're at the mercy of the bank, or you have to sell that house in order to access that money. If you lose your job, you get sick, something happens to you, the bank's going to be like, oh, Joe, I know you're not feeling good today, or I know you lost your job, so we're going to give you access to this money since you need it, right? The bank's not going to do that for you. So that's something that you need to consider. Okay, so I hope you understand this piece, because this is a very, very important